Hi viewers. Welcome to our YouTube channel Everything About Accounting. If you want to learn accounting easy and simple way, you are in the right place. We all know that debit and credit play an important role in accounting. If you want to understand the treatment of accounting transaction quickly, you need to understand the concept of debit and credit. So, in this video, we will learn 1. What is debit? And what is credit? 2. Rules for identifying debit and credit. 3. Difference between debit and credit. So, today's video is very important for those who want to understand the basic concept of accounting. Don't skip, please watch this video from start to end, otherwise you will not be able to understand the core concept of debit and credit. Before we start, please subscribe to our channel and hit the bell icon for getting regular updates about accounting. So let's get started. One. What is debit? And what is credit? There are two or more accounts in every transaction in accounting. One is debit and another one is credit. If we analyze the golden rules of accounting, we will find the definition of debit and credit. Debit. Debit is the receiver. Debit what comes in. Debit all expenses and losses. Debit denotes the left side of the accounts. Credit. Credit is the giver. Credit what goes out. Credit all income and gains. Credit denotes the right side of the accounts. I hope you have understood what is debit and what is credit. Now we try to understand. 2. What are the rules to identify debit and credit? In double entry system, the total amount of debit is equal to the total amount of credit. There are two methods for identifying debit and credit, which are as follows. 1. Traditional method. 2. Modern or accounting equation method. 1. Traditional method. Under the traditional method, debit and credit are identified following way. First. I. Personal account. For personal account. Benefits receiver, debit. Benefits giver, credit. For example, let's say, paid to Mr. Wood $4,000. Here involved two accounts. Mr. Wood account, benefits receiver, debit. Cash account, benefits provider, credit. Now, we come to 2. Property account. For property account. Property comes in or increase, debit. Property goes out or decrease, credit. For example. Purchase of furniture $6,000. Here involved two accounts. Furniture account, property increase, debit. Cash account, property decrease, credit. 3. Nominal account. For nominal account. All expenses and losses in business, debit. All income and gain in business, credit. For example, salary paid for the month of June 2019 $3,000. Here. Salary expense account, expense increase, debit. Cash account, asset decrease, credit. Second example, received interest income $500 bank account, asset increase, debit interest income account, revenue increase, credit. I hope you have understood how to identify debit and credit under the traditional method. Now let's understood how to identify debit and credit under the modern or accounting equation method. 2. Modern or accounting equation method. The modern method of identifying debit and credit are stated below. I. Asset account, asset increase, debit asset decrease, credit. Example of asset account, cash, land, building, goodwill, copyright, inventory, debtors, bills payable, prepaid expenses, etc. 2. Liability account, liability increase, credit liability decrease, debit. Example of liability account, bank overdraft, long-term loan, creditors, note payable, accrued wages, income tax payable, debenture, etc. 3. Owner's equity account, owner's equity increase, credit owner's equity decrease, debit. Example of equity account, ordinary share, preference share, retained earnings, reserve, etc., additional capital, etc. 4. Drawing account drawing increase, debit drawing decrease, credit example of drawing account, drawings v. Expense account expenses increase, debit expenses decrease, credit example of expense account, salary, purchase, wages, rent, electric bill, insurance premium, advertisement, stationery, interest, etc. vi. Revenue or income account revenue or income increase, credit revenue or income decrease, debit example of revenue or income account, sales, interest income, rent received, commission received, service revenue, etc. Now we try to understand 3. Difference between debit and credit, debit versus credit. 1. The receiver of accounts is called debit, on the other hand the giver of accounts is called credit. 2. Debit means what comes in, on the other hand credit means what goes out. 3. All expenses and losses are debit, on the other hand all income and gains are credit. 4. Debit denotes the left side of the accounts, on the other hand credit denotes the right side of the accounts. 5. An increase in debit leads to decrease in credit, on the other hand increase in credit leads to decrease in debit. 6. The short form of debit is doctor, on the other hand short form of credit is SR. I think at the end of the video, you're clear about what is debit and what is credit. What are the rules to identify debit and credit? And what is the difference between debit and credit? If you like this video, don't forget to comment, like, and share. You can also visit our official website www.everythingaboutakcounting.info for more updates. Thanks for watching.